Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on the April 2024 inflation rate and MPC meeting expectations. Last week, the National Bureau of Statistics (NBS) released the April 2024 inflation report. The report showed a persistent rise in Nigeria's inflation rate. Headline inflation for April came in at 33.69% year-on-year from 33.20% in March 2024. On a month-on-month basis, prices rose at a slower pace, 2.29% in April from 3.02% in the previous month. This shows that the pace of the inflation rate may have begun to subside. This moderation experienced in April may be linked to the appreciation of the naira by over 35% month-on-month, and the reduction in diesel and aviation fuel prices supported the slower than expected inflation rate despite the hike in electricity tariff in the month of April. Notwithstanding the high inflation rate, 33.7%, remains a cause for concern as it is the highest since the rebasing of the Consumer Price Index used to measure the inflation in 2009. The high inflation rate has significant implications for the Nigerian economy, potentially posing challenges for businesses and investment opportunities. Food inflation remains the major driver of the inflation in Nigeria, coming in at 40.53% year-on-year for April 2024, higher than 40.01% recorded in March 2024. However, on a monthly basis, food prices rose at a slower pace of 2.5% from 3.6% in March 2024. This can be attributed to slower increase in the average prices of yam, water yam, and Irish potato. In a similar trend, core inflation, which excludes food and energy items, rose by 0.94 percentage points year-on-year to 26.84% in April 2024 from 25.39% in March 2024. On a month-on-month basis, core inflation came in lower at 2.2% from 2.54% in March 2024. This can be attributed to appreciation in naira within the period under review. We expect the inflation rate to sustain its upward trend in May 2024, given the depreciation of the naira and the continued food cultivation crisis in the major food producing areas. Hence, we project an inflation rate of 2.23% month-on-month and 34.07% year-on-year in May 2024. Ahead of the May 2024 MPC meeting, the third Monetary Policy MPC meeting in 2024 will commence today, 20th May 2024, and conclude tomorrow, 21st May 2024. Recall that the last meeting in March, the MPC raised the benchmark rate by 200 basis points to 24.75%. The second rate increased in 2024 from 22.75%. The considerations of the committee will remain focused on the current inflationary pressures and volatility in the exchange rate as the CBN remains committed to its price stability mandate. Hence, we expect the CBN's MPC to raise the benchmark interest rate by a minimum of 100 basis points. The increase in MPL sustained the high fixed income yields, which is positive for savers and investors. As a result, the money supply is reduced, implying higher investments relative to spending, an increase in marginal propensity to save. On the other hand, the high interest rate led to an increase in lending rates and a crowd-out effect for the private sector as the increased rate on commercial papers remained elevated, discouraging several companies from raising funds. Investment strategies to hedge against inflation. Given the persistent inflation rate, it's advisable for investors to increase their risk appetite to bridge the gap between inflation and returns in the market. For instance, consider moving your funds from a regular savings account to a high-yield savings account or reputable platforms with high returns. You can also explore more commercial papers, average yield 24%, with a good credit rating, as well as treasury bills, average yield of 20%. These strategies can help you hedge against inflation and make the most of your investments. Additionally, investment in dollar-denominated assets will also provide a hedge against inflation due to the persistent depreciation of the naira. For investors with high risk appetites and long-term horizons, we still expect more upside in stocks with strong fundamentals, as well as consistent and high dividend returns, which represent opportunities that can also be explored. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed.